Welcome to the 2023 brand new price action course. Yes, we will go. Yeah, you have a chance to watch this brand new price action course. Price action. I love this topic. A really nice tool. And yeah, let's start. We go through the mechanics of price action and develop an effective trading strategy across a range of market conditions. The system, this price action system, is an add-on to your supply and demand strategy. It is so well developed that it can be used also by its own. Okay, this is also possible. My recommendation is definitely to use price action as an add-on. We will start with our agenda. And yeah, we will start with the definition. What is price action? Also, we will cover some reversals, right? Some patterns, and we will start with the bullish price action candles, and that means the hammer candles and also the bullish engulfing. After that, we will talk about how to trade these both bullish price action candles. The next step will be the bearish price action candles. That means shooting star, the hanging man, and also the bearish engulfing. After that, we will talk about how to trade this bearish price action candles. Then we will continue with a bearish price action formations. That means our head and shoulders, our super famous head and shoulders. And yeah, I will talk about also here how to trade this head and shoulders. Then we have the bullish price action formation. This is the inverse head and shoulders. Yeah, and how to trade. And last but not least, the channel trading. That means trend line. Here we will talk about trend line trading. First, the channel trading. It means a range trading, and then the breakout trading. Yeah, let's go with definition of price action. And here, again, we go through the mechanics of price action and develop an effective trading strategy across a range of market conditions. The system is an add-on to your supply and demand strategy, but it's so developed that it can be used also on its own. Again, here, guys, my recommendation, please use all the informations, right? I'm a fan of it. To use all the informations means supply and demand, location, direction, zone refinement, zone qualifiers, and of course, all our indicators. Price action is used to analyze trends and identify entry and exit points in trading. And this is a really strong tool here to analyze trends. For example, here we will find a nice hammer candle in the potential higher low area. Okay, that means, yes, you can trade the trend, right? Also, of course, entry and exit points. And here exit is really nice. For example, you are long in an uptrend, and you will create a shooting star in the higher high area. That means take profits, or it is possible to take profits here. Many traders use price action to record past movements and then trade potential breakout and reversal patterns. And that is here the key. You want to trade potential breakouts or, of course, reversal patterns. That means we see prices dropping and then we can buy the price in a super cheap area, or of course vice versa. We see we see a rally in price and we have a shooting star on top. That means, okay, sell the price. That's the idea. That's a definition of price action. Let's go into our first price action candlestick. That means here our super popular pattern, the hammer candle, right? You can see this and around and in the trading world, right? Super nice. Yeah, and we'll talk about how to trade one of the most popular patterns and tactical analysis. You will learn how to combine the hammer candle with supply and demand and our indicators to read and trade it, okay? That's important to read it. Sometimes it's not possible to trade this hammer candle, but it is necessary to read, right, to identify the hammer candle. But of course, we will also talk about here how to trade the hammer candle. Let's go into our hammer candle. And here you see the chart here means it's, I think it's, I don't know which chart it is. But yeah, you see here, this is a hammer candle. We talk about how it has to look like. A hammer candlesticks indicate a potential price reversal to the upside. That's a very important part here. It means it is a bullish reversal here, okay? That means hammer candlesticks indicate a potential price reversal to the upside. That means we want to buy. If we see a hammer candle, then we want to buy the hammer candle. The price must start moving up following the hammer. This is called confirmation. That's also part here. If we see price is trading above our hammer candle, this is our confirmation. Sometimes necessary for anticipate. It is not necessary. Let's talk about the hammer candle. Hammer candle is a price pattern that occurs when price trades significantly lower than its opening, but rallies within the period to close near the opening price or above. And this is a key here, how it has to look like the hammer candle. Okay, again, hammer candle is a price pattern that occurs when price trades significantly lower than its opening, okay? But rallies within the period to close near the opening price or above. Here to understand here, we have more points that describe the hammer candle. Hammer candlesticks typically occur after a price decline. Okay, you see here price is dropping, right? They have a small real body and a long lower wick. Okay, the lower wick is the wick to the downside. And this, yes, they have a small real body like a hammer, right? That's why we call this hammer. Here also, look at this. It is like a hammer. That means a real body. We need a body, right? Not only a super doji, super small doji, we need a body and a long lower wick here. The hammer candlesticks occurs when sellers enter the market during a price decline. Okay. By the time of market close, buyers absorb selling pressure and push the market price near the opening price. And that's a way how to create, how to form this hammer candle. Okay, very important. I got some questions about the hammer candlesticks. Yes, but why is this a bullish reversal? This is the answer. By the hammer candlesticks occurs when sellers enter the market during a price decline. By the time of market close, buyers absorb the selling pressure, and that's the key. Buyers absorb the selling pressure and push the market price near the opening price. That is the answer here of the question, why is this bullish? Why it has to look like this? The third point is the close can be above or below the opening price. Also, the close should be near the open for the real body of the candlesticks to remain small. Here, that means it is not necessary that it is a bullish reversal that we get also a green body. It is not necessary. Necessary is that we close near to the opening to create a hammer candle like this, to create a hammer candle like this here, okay? The lower wick should be at least 2 times the height of real body. And look, you can see this here. The lower wick, it's always a wick to the downside, should be at least 2 times the height of the real body. The next slide will be helpful for you, and this is the key takeaways for the hammer candle. Again, right, we will talk about only the hammer candle here right now, and this is the slide for you. You can work with it, you can screenshot this also here if you want. It's very helpful for the hammer candle trading. First point is the position, right? And here, this is a downtrend, and here we have an uptrend. And typical occur after a price decline must be on the lower low or higher low. That means it is not possible to trade the hammer candle in the middle of nowhere. That's not possible. We need a clear position. We have 2 positions for the hammer candle that make sense to trade. Again, it is only a bullish reversal. Here, left side, we have a clear downtrend with a high, low, lower high, and the lower low. And we need the hammer candle here in the lower low area, okay, to trade the correction. That means it is a bullish reversal. We want always to buy. It's only allowed to buy the hammer candle. That means if we are in the lower low area and we create a hammer candle, okay, fine, you can buy the hammer candle and trade the correction. In an uptrend, it is different, right? We want to buy, always to buy the hammer candle. That means we have an uptrend with low highs, higher lows, and the higher high. And here we need the hammer candle in the higher low area to trade the impulse, okay, to the way up, to the new higher highs, for example. Here, if we buy the in a downtrend the hammer candle, we want to buy it in the lower low till we create a new lower high. Another one is the wick. The wick, here look, left side, we have a clear hammer candle here, and look, the body, the size of 1, right? The lower wick should be at least 2 times the height of the real body. That means this is the range of 1 here, and we need it minimum. The minimum is to have the lower wick 2 times at least, okay? Here it is more like, I don't know, 5 or 6 times to the lower wick. It's fine, but it's not better, okay? If we have a long lower wick, it's not better than only a 2 times wick, okay? End of the day, we need a clear hammer candle. It should be like this, right? Like a real hammer. Next point is the structure. And here you can see we have 2 hammer candles. The only difference is here we have a green body and also a red body. The close can be above or below the opening price. Okay, here you see this is the opening, here is the close. That's the reason why we got a green body. And here it's the opening here, and this is the close, and that is the reason why we got a red body. The close can be above or below the opening price, although the close should be near the open for the real body of the candlestick to remain small. That is the part here again, guys. We need the close near to the opening to create a hammer candle like this, right? We need the body above here on the top to create a hammer candle. Here we have also a wick on the top, and that is fine that we have no wicks or a small wick. It's fine, but end of the day, we need the body close to the top of the wick, okay, to have a clear hammer. The last point here for the key takeaways for the hammer candle is a buy action. And hammer candlesticks indicate a potential price reversal to the upside. Again, we want to buy the hammer candles. And we will learn in the next slides how to trade. End of the day, this is a hammer candle, and we will buy. We have different options. Yes, trading options for the hammer candle. And here, for example, buying opportunities like this here. Yeah, we will talk about any of all of this trading opportunities here in the next slides. Fine, that was a key takeaways for the hammer candle. The next point is key takeaways indicator. And here, remember the beginning, we talked about it, the hammer candle is only an add-on, right? And here we will talk about how to trade the hammer candle with the key takeaways here for the hammer candle and also with the indicators. We don't need a 10 of a 10, right? We don't need all of this in a line, right? It's sometimes also good if you have 7 of 10, 8 of 10, up to you. That depends on your trading strategy. Of course, the best of the best if we have everything in line, okay? Let's start with the seasonality. Again, the hammer candle, still a bullish reversal. We only want to buy, okay? The seasonality here means, look, the screenshot here, this is the seasonality chart. And the green line here, the green line chart is a real price. And the gray line chart is this OTC seasonality chart. And here, for example, 8 years. And this is the same. It is not right or wrong if you use 2 years, 3 years, 20 years, 8 years, 10 years. It's fine. Sometimes it is also different, or it depends on the asset, right? Sometimes maybe you're using for gold 10 years, it's fine, it's working nicely right now, but for silver 4 years, or for the S&P 500, right? That depends on you. And your current price located in a buying point or selling point, right? This is also fine. The hammer candle is, of course, only a buying point. But here, for example, if we, that's the key takeaways for the indicators, it's also described for some bearish engulfing sand. Here, of course, only the buying point is important. And look at this here. The real price is decline, right? So we are dropping, and that's what we need, right? Remember of this here. Typical occur after a price decline. Okay, great. Prices decline, great. And then here, look at this buying point here, right? All of this is a nice buying point. You can also pinpoint this, right? Exactly on this low here or this low here. Depends on you. But definitely this is a buying point. And if we are located, right, if we see a vertical line, we are still in this area here, and we create a hammer candle, we can buy the hammer candle. Yes, that's fine here. Let me check. Yes, and of course, also if we trade this here, for example, for a hammer candle, and we are then, right, it's a buying point, and we are then in a selling point, and we are long with a bullish reversal, the hammer candle, that's of course also exit, okay? If we are still then in a selling point like this here, for example, right here, to the left, to my cursor here, that's of course a short opportunity, or not a short, an exit from your long idea. Here, for the bullish reversals, a hammer candle, we need all this. So hammer candle key takeaways, right? And then with a seasonality, of course, only a buying point to buy for our entry. The next one is the valuation. And you can see here, it is the yellow line is gold and the blue line is the US Treasury. And both are here right now in the bullish area. You see here, we are in the green area. That means we are in a bullish area. And this is the same here, specific valuation asset. And here also it is the same, right? We talked about it here, the 8 years, for example, the seasonality. You can use any of years, like, yeah, if you want. And the valuation, it is here the same. For example, gold is working nicely against, right, with the valuation assets, with US dollar, with against the Japanese yen, of course, fine. Or maybe you're using like Apple, right? Apple valued against the treasuries, gold, um, or you're using I don't know, the New Zealand dollar against crude oil, for example. Here it is also again not right or wrong. That depends on, yeah, it back testing, guys, right? Check the what makes sense, right? Check the last 10 10 significant extremes, right? If you're in a buying selling point, okay, which one is the best? And then use, yes, this is never right or wrong if you use gold or not as a valuation asset. Here, not right or wrong, but anyway, end of the day, we need this in the green area, in the bullish area, okay? Specific valuation asset located in the bullish area for long, okay? That is for the indicators. Another one is a COT, and here, of course, COT, guys, this is not a this is not an indicator session, right? It's only a price action session. You have to be an expert already in the indicators to use it. The COT is only working with futures, guys. That means you will never got a result if you have a Apple right now here, okay? So only S&P 500, Dow Jones, gold, all of our futures. And here I use the commercials only, right? That's the true, that's commercials here. I changed the two others, the non-commercials and speculators to false, but here not right or wrong for me. I use only commercials. And the commercials should be in the bullish area here also, okay? That means the commercials looking to buy or buying in the past, and I hope also in the future. That's the idea of for the COT. And look at this here, this commercials. This is a blue line, and we are here in the extremes, in the green area. That means we are bullish. That's perfect for our hammer candle. The last, our last indicator or strategy is our trading day of the month. And here, it is very easy. We need the trading day of the, we don't need, but it is a nice add-on. If we have everything here in line, for example, or not 10 of a 10, maybe 8 of a 10 or 7 of 10, and then the trading day of the month. And look, for example, we are at the 10th trading day here, right? You see we have a green day. Oh, let's go to the 13. Okay, 13 is better. As for Apple, the 13th trading day of the month March. We have it on the 5 years, a little bigger. We have 5, 10, 15 years. We have on 5 years a probability on 100%, okay? And 10 years, 80%, and 15 years, 73%. That means we can expect the last 5, 10, 15 years definitely strength on this buying point, on this day. That means if we create a hammer candle, okay, if you create a hammer candle on the 13th trading day of the March, then perfect, right? That's also additional information. Great. And here, and that's some additional information here also. Bullish here, for example, it's a hammer candle, bullish trading day of the month. At best, a cluster of several days to stay in the trade, right? And that's what I mean here. Look at this. We have 1, 2, 3, 4, 5, 6 6 bullish trading days in the last 5 years. Really, really nice. Only one is gray here, but this is impulse correction, right? This is fine. You will never see 6 days only green candles without any correction. Means a red candle also. It's maybe a small candle. But here, that's the reason we can use also the trading day of the months here to stay in the trade. That means hammer candle, right? Remember here back to the position, and we are here in the higher low, in an uptrend, and we create in the higher low area. We create a hammer candle. Fine, we want to buy, right? Seasonality, for example, we have this buying point here. Great, we expect a lot of strength, right? Valuation, gray. Sorry, it's green, it's bullish. Perfect, we can buy. COT make no sense here because it is Apple, for example, right? We can skip this one. But then also the trading day of the month. That means, yes, you can stay longer in the trade till we have a selling point, right? You can stay in this trade till we have a selling point. But then you have to expect that we have an impulse correction. Wait, for example, here, we come back here, right? Create a new higher low, a higher high, higher low, higher high. It means you have to expect price comes also back or will trade against you sometimes. And here, this is a little bit just more like pinpoint the dates. You can definitely stay in the trade till the 16th of March. It's 16th trading day of the March. If you enter here of a 10th, right, on the 10th trading day of the month on March, and we create a hammer candle, and you enter, right, you buy, you will get with the trading day of the month, we get more trading days. You means, okay, green, 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 perfect. It's a cluster. Here it's 1 day gray. Okay, fine. I know it's maybe a rally, and then we come back a little bit, and then, but look, the other days we will rally again. You can definitely stay in the trade, and this would be maybe the first significant impulse. And then if we check the whole months here, after the 16th trading day, you will see gray, gray. Okay, 1 day green, then with a gray, gray. That means the best of the best is the entry here, right, at the 10th, and you exit. It makes sense to stay in this trade till here's the 16. That means you will stay 6 trading days in the trade to riding the wave. It is, of course, you can trade also 6 trading days will be maybe only like this here. Depends on where you want to enter. But if you want to trade the whole way up here, it's also fine, right? It's different, the different indicators. If you want to trade the seasonality here, to stay in the trade till the next selling point here, okay, but then expect you will stay in the trade with impulse and also correction. Impulse, also correction. Here, if you trade the trading day of the month only, I think you will get never a real reaction. You will trade only a huge or a significant and powerful rally, right? And then possible up to you, depends on your trade plan. Take profits here, for example, and look for another re-enter, right? Look here, we have not really a green cluster here, no green green days. Maybe in the next month, to find a re-enter here. Okay. Good. That is a key takeaway. So you can screenshot. I hope this is very powerful here for you, the key takeaways. I think, or I hope, yes. Yes, here, one more time, the key takeaways, hammer candle here, and the key takeaways for the indicators. Yes, the next point is how to trade. And yes, that's the best of the best, right? How to trade these hammer candles here. Let's go. We have 3 different options to trade the hammer candle. Only 3. Maybe if you remember on my German price action course, I think it's 1 or 2 years ago, we had 4, but it make no sense. Number 4, we can include this in 3, right? In the option 3. Yes, here the hammer candle, how to trade it, take action, option 1. Okay, our analyze is a lower low here. Okay, and if you remember, we have the hammer candle should be in the lower low or in the higher low. Okay, that means we are in a lower low, in a downtrend. Look at this, right? Perfect here in the lower low. We created a hammer candle. Perfect. And very important that this hammer candle is completed, right? If we talk about a daily hammer candle, wait for the next day. We need a real close. If you talk about the weekly hammer candle, then wait for the next Monday, right? To have a real close. If we talk about the monthly hammer candle, wait for a real close, means the first trading day of the next month. We need a real close here. Of course, he is not right or wrong. For example, you can also have a 15-minute hammer candle, 20-minute, 23-minute, 60-minute, 120-minute. For me, of course, the higher time frames are significant, right? It's the best of the best. Please backtest the hammer candles, for example, in stocks here. And yes, also valid for all the assets, Forex future stocks. Here make a retest, right, on monthly chart or weekly chart. They are the best of the best, but of course depends on the structure of the surrounding. Sometimes also a 60-minute hammer candle makes sense. Yes, hammer candle and action is long above. We call it long above. Let's check together here our 4 points, and here let's check. The hammer candle key takeaways must be met. That means is must be met. Very important that we have a position, fine, wick, okay, structure, okay, and then one of the 4 buying actions. This is an add-on, okay? This is fine, it's good to have. Then as soon as a hammer candle is completed, that's what I talked about, right? We have to wait to complete the hammer candle, right? We need a real close. The hammer candle is completed in respective time frame, right? Weekly, monthly, daily, 60 minutes, 23 minutes, up to you. We mark the hammer candle high and low. Look at this. We mark the high here and the low. Good. Number 3 is the entry. We are talking about the option 1, right? The entry here only long is allowed. It's a bullish reversal. Is set slightly higher than the high. Okay, that means slightly higher. Look, the high is here, for example, at 131. Okay, that's our high. Our long order is higher, means 131.50, 132, right? Slightly higher. Why? What is the reason? The reason is to avoid possible fake outs. Sometimes we get a confirmation. Remember, that means we completed this hammer candle here, and then price moves with here. This is a weekly chart. Then next week, Monday, we will trade a little bit above here, and then we got more weakness, for example. We call this fake out. That is the reason why we always move our entry a little bit higher, right? To avoid this fake out. Here, it is also not right or wrong. For Forex, 10 pips, 20 pips, 30 pips, I don't know. For futures, a few dollars, a few points. That's It depends on you also backtesting a little bit, right? You are here, you're watching this price action course. It means you're already advanced. Okay, that means moves this a little bit higher. Again, my recommendation here, for example, I think it's Apple. It is, for example, the highest 131. Yes, buy it 100. Buy it at 132, for example. That's absolutely fine. Number 4 is stop loss is set with a respective distance. And here, this is a blueprint recommendation, right? plus 33% below the low. That means here we recommend in the blueprint a stop loss of 33%. Here also, guys, for you, depends on your trading experience, right? If you're using 10%, 50%, 10% stop loss, it's fine. It's not right or wrong here. Yeah, smoothest stop loss below here. That's option one. I think very easy. Mark the high, mark the low, move your entry order, your line a little bit above to avoid fake outs, and your stop loss below. Very, very easy. Let's go to part one, and here this is the reward. Why is the reward less? What is the reason? Less means, look, we will trade always in this scenario here, we will trade always the full range of the hammer candle, right? Sometimes it is a really big zone. Okay, that means your reward will be less, right? Here is a like this a 100, 140, around more than a 140. No, around here 140 is your 1-to-1. Okay, you need $10. That's the reason. It's not right, not wrong, but the most of the time, if you trade a full weekly, monthly reversal, right, you will get a big zone. That means the reward is less, but it is fine, right? It's definitely possible to create a new here we are in a downtrend, a new lower high, and you get more than 1-to-1s here. Fine. The trigger probability, and that means here the entry is good. It's perfect. Why? It makes so much sense that we are filled, right? Or the probability is so high that we are filled, because the next candle, right? If we start, it's a weekly time frame, the next Monday, and we will trade above the hammer candle, right? Then we are filled. That's very easy to be filled. We don't have to wait for anything else. If we are waiting for that price moves higher, we are already set our order here above the highs, and if we open next week on Monday and we move higher than the high, then we are filled. That means we have a 100% probability to be filled, right? Or not, maybe 99. You will see maybe for stocks, for example, you get a huge gap up, then you're not filled or very bad. But yeah, 99% trigger probability. The next one is the protection. This depends on your stop loss. Here, your stop loss is 33%, 50%, 50%, 100%, 10% is very, very good. Why? The reason is your stop loss must be below the low. That means you have definitely, and we are talking about, this is the lower low here, right? This is the lower low. That means, okay, it is time for the correction to create a new lower high. Means this is a really strong pivot here. And if your stop loss is below the low, then that is the best of the best. Yeah, you see here, trigger probability is one of the best, protection is one of the best, but the reward is less. That is the point here. That is option number one. Option number two is a little bit different. And here, the analyze is we are again at the same chart. In the lower low, we are in downtrend. Lower low, we create the same hammer candle here. Hammer candle, and action number one is long within the range. Okay, range. What means with the range? Option two, again, hammer candle key takeaways must be met. Important, always the same. Number two, as soon as the hammer candle is complete in its respective time frames, right? Weekly, monthly, daily, 50 minutes, 23 minutes, up to you. We mark here also the hammer candle high and low. The high is here again, the low is here. Number three, the entry long order, it is still a bullish reversal, can be made market or as a set, right, within entire range of the hammer candle. What does that mean? It means if we create on weekly evening, weekly night, sorry, Friday night or Monday morning, right? Monday morning, it's definitely completed. And we create this hammer candle. And we see, for example, this is the high, the low, oh, the range is big. The hammer candle is big. And for example, this here around the 145 is our next supply area, for example. Yeah. That means we have a clear target, right? This would be here our supply area, next supply area. This will be our target. We will anticipate here, or we expect here the next lower high. And we have a less of profit margin. It means your rules you need 3 hours, 4 hours to go in this trade, and that's not allowed for you because you have less reward, only a 1-to-1 with the full of the range here of the body of the hammer candle. Then you can use a market order or a set within the entire range of the hammer candle. That means you have the real range here, and you need for around the 145 a 3-to-1, for example. Okay, move your entry. You have a target here, stop loss here. Move your entry line, right? Lower, 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 till you have the 3-to-1, for example, around the next supply area, the 145. That means it's allowed to buy Apple here in the entire range. Okay, here. This is a set, right? Very easy. If we start with a new weekly candle on Monday, we move maybe a little bit higher, for example, possible, and then we will move lower and into your area here, for example, then you're filled, and then go up. You're filled, and you can enjoy the small wave. This is a set. Market is also possible, and here sometimes you can use this for lower time frames. Market means you will not set a trade, right? Order. You will wait. You have an eye on this chart here and wait that we move lower into this area, or maybe we see already a reaction, right? A confirmation above the high, and then we come back into this area. Also fine. Then we move into this area here, and you see this. Okay, great. It is a buying opportunity. You can buy also here. You can go long within the range. It's not right or wrong. Always the options depends always on your trading strategy, your trade plan, and also on the risk to reward ratio, what you need. Stop loss here, it is the same. Stop loss is set with a respective distance. Here, for example, blueprint recommendation 33% below the low. That is the same stop loss like the option number 1. Here, the reward is like 50%. It is okay. Why? It is definitely better, right? The option 1 was less. It is definitely better than the option 1 because we will get a better entry. You will buy in the entire range here. And if your entry, for example, here in this area, you will get definitely a better entry with the same stop loss, right? Like the option 1. That means you will get definitely a better reward. That means the reward is better. The trigger probability is here not the best. Let's go back to option 1 very quick. Here you saw option 1 trigger probability was good, the best of the best, right? And here it is like 50%. Why? The reason is, if you want to buy in this area here, and we will talk about again here, for example, in this area, maybe price will never come back to your area to a buying order. You will see a confirmation like option 1. You'll move above the high, and then only green candles, right? Or maybe a red candle here, but then a green candle higher to the 145, higher to the 150. It means you will be never filled. Not right or wrong here, depends on your trading strategy. If you want to increase your reward, then it's fine here, but you have to live with a probability not to be filled, okay? And then the protection, and that means here the stop loss again. It is good. Why? You have again the same stop loss like the option 1. Your stop loss is below the hammer candle, right? You have the best of the best stop loss. Okay, we covered now the option 1. Option 2, you see here what is better, what is what is not so good, right? It's a difference is only the trigger probability and reward. Here more reward than the option 1, but less trigger probability, less the option 1. Up to you. Number 3, and again this is our last option to buy the hammer candle. It looks a little bit different here. Yes, let's go into the chart. Give me a second. Okay. I had to remove this one here. Good. The hammer candle option number 3. Analyze. It is the same here. And please look only here to this one. Okay, first we are still in a downtrend, and again in a lower low we create a hammer candle, and here the action is long within a lower time frame zone. Let's go to the right. Again, hammer candle key takeaways must be met. Always the same. Number 2, the same here. As soon as the hammer candle is completed in respective time frame, we mark the hammer candle high and the low. Here it is a high, this is a low. And then look at this here. We will check here the lower time frame. Okay, you have the high, the low. You can mark this in your chart and then go into the next lower time frame. And here we are looking for demand. Look at this. That means if you go from weekly to daily and you have no demand here, it's fine. Go to 240, 480, 600. 120, 60 minutes. It depends here also on your own trading strategy, on your trading experience. It is not right, not wrong if you move or if you use or skip the 60-minute time frame, for example, or the daily, right? Your job is here to identify a lower time frame, high quality demand zone in the full range of your weekly hammer candle. Okay, let's go to number 3. The entry, long order, can be made market or as set within entire range of the hammer candle in the lower time frame here. Okay, that means let's go into the lower time frame. Look at this here, right? This is a lower time frame, and you see the blue line. Okay, the blue line here, this is a hammer candle high. Okay, no, 1 second, sorry, that's a mistake. The gray lines, okay, these are your hammer candle high, like this here, and this is your hammer candle low here, okay, the full weekly hammer candle. And now the idea, now option 1 would be we'll buy this in the above the highs here. Option number 2 is, for example, we will buy it at 130, and option number 3 is we are looking for supply or demand, and here of course demand, it's a bullish reversal. And look at this, it is here, this example is not the best. Okay, I know it is not the best of the best demand area, but this is trading end of the day. You know, guys, right? You will never get the picture perfect demand area and everything is aligned. We are all advanced. Here, this is demand for me and maybe also for you. That means we have a clear drop, multiple red candles. The last ones are also, the 2 last ones are also explosive. That means, okay, I have a drop. Then I have 1, 2, 3 indecisive candles and then explosive green candle. Then another indecisive and another explosive candle. It means For me, this here is demand. Okay, I will mark my demand here with horizontal lines. And look, the blue line here, this is a proximal line, and this blue line here is a distal line of my lower time frame demand zone. Of course, it is a part of the whole weekly hammer candle, right? This is a high, this is a low. It must be a part of it, of course. That's the reason why we mark our low and highs from the hammer candle. Find a demand area in this zone, in the range. Yes, that is our demand. And then, yes, here we have the option to get, this is a regular demand area, and how to trade this one. For me here, I choose the option to go long here. Wait. It means this is a regular demand zone. That means your proximal line is your entry. Use your proximal line maybe to avoid the spread a little bit above the longs, right? It's up to you. It means if you want to trade the wider version, your long is your proximal line. Boom. Here 128, long, fine. Look, price comes back here into this area. You're filled, more unfilled buying orders, and then price is moving up, right? And here you refined your zone. It's less like, look, the whole range, here's a high, this is a low. Maybe your range is like 50%, right? That's perfect. That's really, really good, but not right or wrong here. Any option, all the options are not right or wrong. You can choose. Yes, here, that's the preferred version. That's your long, sorry, the wider version, the proximal line is your long, 128, and your stop loss. And then you can choose here. Also depends on your profit margin, your experience, your trade plan. Move your stop loss below your distal line, below your lower time frame demand zone. Okay, or maybe use the option 1, option 2 stop loss. That means below the whole hammer candle. Okay, with a little bit, below a little bit here. For example, 33%. Let's go to number 4. Stop loss is set with a respective distance, plus 33%. Below the low is possible here, right? If you use this, or maybe the lower time frame. Stop loss. And let's go here. You see, we have like 4 right now for categories. The reward is definitely better, right? Around 75% better than option 1, definitely better than option 1. Option 2, maybe, depends on whether you want to buy in the whole of the range. Here, option 3 is if you find this entry, that's definitely better than option 1 and 2. Your zone is very small, like 50%. Your trigger probability is like 50%. We don't know. Again, the best probability of option 1, long above the monthly hammer candle, right? Very easy. If you get a confirmation, let's go. Here, we don't know. Maybe we will fill more unfilled selling or unfilled buying orders here in the lower time frame demand zone. Maybe not, right? Maybe we will come never into the zone. We will see a small drop in back to this here, 130, and then another rally. Possible, we never know. The protection, and here we're talking about the protection of the higher time frame. Here, this one below the whole weekly demand whole weekly hammer candle. This is really good, the best of the best. If you use a lower time frame stop loss protection, it's like 50%, right? We don't know. It's possible. It's possible that we are stopped out here in the zone, right? That we come back into this demand, move higher, and then we are stopped out. It is possible. We don't know. That's here, depends on your experience, trade plan, and reward, right? Never right or wrong, but here the best protection definitely here. Yes, that's guys, well, that's everything about the hammer candle, the theory, right? We talked about the option number 1, option number 2, option number 3, how to trade, the pros and cons again, yet to all the different options. We talked about the hammer candle key takeaways, right? Position, wick, structure, buy action, also the indicators, right? Seasonality, valuation, COT, and the trading day of the month. Part 3. The next part is we will go into the chart for a practical application sample. Here, I will show you how to use all the informations to identify this, the hammer candle and how to trade it. And here with all the indicators, right? And we will talk about all the different options. Options number 1, option number 2, option number 3. Okay, let's go to the chart.